You see it, the perfect setup. You take the trade, and within minutes the market whips around, snipes your stop loss, and then rockets in the exact direction you predicted. It feels personal. It feels like some algorithm is specifically designed to make you lose. For years, I bought into that lie. I was convinced it was me against the market, but I was wrong. The market was never my enemy. It was just a mirror. Here's the most painful truth in trading, the one that separates the 90% who fail from the handful who succeed. The market doesn't create your problems, it just reveals them. Your account balance isn't a report card for your strategy, it's a diagnosis of your own psychological flaws. Every mistake, every impulsive click, every gut-wrenching moment of anxiety, it doesn't start on the chart, it starts inside of you. Trading is simply the arena where you're forced to confront yourself. This isn't you versus the market, it has always been you versus you. Let me tell you about a trader we'll call Alex. Alex was sharp. He spent 2 years studying, backtesting, and building what he thought was a rock-solid trading plan. He knew market structure, he had his entry criteria dialed in, and his risk management rules were strict. On paper, he was ready, but in the live market, he was bleeding out. A great winning trade would become a break-even because he'd snatch his profits way too early, terrified of giving them back. A small, acceptable loss would morph into a catastrophic one because he'd keep moving his stop loss, convinced the market was just about to turn around. With every loss, his frustration hardened into a toxic certainty. He started seeing enemies everywhere. It's the brokers, he'd mutter, glaring at a wick that seemed to perfectly hunt his stop. They're just grabbing liquidity. He'd watch a trend reverse the second he entered and become convinced that some big bank algorithm was targeting his tiny order. The market is rigged, he finally declared. He blamed the news, the volatility, the whales. He blamed anyone and anything because the alternative was just too painful to accept. The alternative was that the hundreds of hours he'd poured into his strategy weren't the problem. The strategy was fine, he wasn't. Alex was stuck fighting an opponent that didn't even know he existed. He was yelling at his own reflection, completely convinced the guy in the mirror was throwing the first punch. His story is the story of almost every trader who fails. It's a spiral of blaming everything outside yourself, because looking inward requires a level of raw honesty that most of us aren't ready for. The turning point for Alex, and for every trader who actually makes it, doesn't come from a new indicator or some secret strategy. It comes from a moment of brutal, soul-crushing clarity. It's the moment you finally stop staring at the chart and start looking at yourself. Jesse Livermore, one of the greatest traders who ever lived, knew this. He said traders don't lose money because they're dumb, they lose money because they can't control themselves. The market just reflects what you bring to it. If you bring fear, you'll see threats in every tick. If you bring greed, you'll see lottery tickets where there are none. This is where the market as a mirror idea gets so powerful, and honestly, a little terrifying. Let's break it down. The first demon the mirror shows you is impatience. Alex saw a setup that was almost perfect. His rules said to wait for the candle to close above resistance, but the momentum looked so strong. That fear of missing out, that little voice screaming, "Hurry, go," took over. He jumped in early. The market didn't trick him, it simply reflected his inability to wait. That impatience, that need to always be doing something, is a character flaw that becomes lethally expensive in trading. Overtrading isn't a strategy mistake, it's just boredom and a lack of discipline made visible. The second demon is ego. After that impatient trade blew up in his face, Alex didn't feel analytical, he felt insulted. He had tied his ego to the trade, confusing his opinion about the market with his own self-worth. To prove he was right, he jumped back in with double the position size, a classic revenge trade. The market didn't punish him, it just gave his ego enough rope to hang his account. Admitting a small mistake felt like a personal failure, so his ego chose to turn a tiny, manageable loss into a disastrous one. That's not a technical error, it's a psychological breakdown. The third demon is fear. Now, with his account hurting, Alex saw a true A+ setup. It ticked every single one of his boxes, and he froze. The memory of the last losses was too fresh, the emotional sting too raw. He hesitated, waiting for just one more bit of confirmation, and watched the trade play out perfectly without him. The market didn't mock him, it reflected his fear. It showed him that his emotions, not his strategy, were calling the shots. Loss aversion, the fact that losses hurt about twice as much as gains feel good, had hijacked his brain. Impatience, ego, and fear, these aren't market conditions, they're human conditions. The chart is just the canvas where you paint your own psychological portrait, good or bad. So if the market is just a mirror, how do you change what you see? You don't. You change the person standing in front of it. The solution isn't to find a better strategy, but to become a better trader. This is where the real work begins. This is the internal battle. There's a reason they say trading is 90% psychology. It's a performance game, and you have to build an unbreakable mental game to win. First, radical self-accountability. This is the bedrock. Every single outcome, every win, every loss, every missed opportunity is on you. It wasn't the market's fault, it was your execution. It wasn't an algorithm, it was your impatience. Blaming something else makes you a victim, and victims are powerless, but taking ownership. That gives you power. It turns a loss from a painful smackdown into a priceless piece of data about yourself. Second, become a psychological detective by journaling your emotions. A trading journal that only tracks entries, exits, and P&L is mostly useless. The real gold is finding the patterns within yourself. Before you take a trade, write down how you feel. Are you calm and clear, or are you antsy and trying to force something? After you exit, log your emotions again. Did you follow your plan to the letter, or did your ego grab the keyboard? This drags the subconscious reasons for your mistakes out into the open, where you can finally deal with them. Third, build your discipline armor with rules that you never, ever break. The legendary trader Ed Seykota said it best: you have to follow your rules. You use your brain to build the system. During market hours, that same brain is a liability. It will come up with brilliant-sounding excuses to break your rules. That's why you define your risk before you enter a trade and honor it no matter what. You define your entries and exits and wait for them with patience. Profitable trading is often dead boring. It's long stretches of waiting, punctuated by brief moments of execution. Discipline is what gets you paid to be bored. Fourth, master the power of the pause. After a loss, especially a dumb one, the urge to jump right back in and make it back is overwhelming. That's your lizard brain trying to take over. The single best defense against this is to just walk away. Stand up, leave the room, set a timer for 30 minutes and don't look at the charts. This cooling off period isn't weakness, it's a professional tool. It breaks the emotional feedback loop and lets your rational mind get back in the driver's seat. These aren't tips for learning more about the market. They're for learning more about yourself. They are about building patience, humility, and discipline into your very identity. Let's go back to Alex. He stopped trying to predict the market and started auditing his own behavior. His journal became that mirror, showing him the impatience in his early entries and the ego in his revenge trades. He started focusing not on whether a trade made money, but on whether he executed his plan perfectly. He began to celebrate following his rules, even on a losing trade, because he knew that was the real win. His equity curve started to flatten out. The catastrophic losses vanished, replaced by small expected losses, just the cost of doing business. The frantic anxiety was replaced by a quiet, calm focus. He didn't find a holy grail. He didn't beat the market, he finally started to master himself. This is the secret curriculum of trading. You might come for the money, but you stay for the person it forces you to become. Behind every chart is a lesson in patience. Behind every loss is a lesson in humility. If this idea of the market as a mirror clicked for you, let me know in the comments what your single biggest aha moment was. Your insight could be the one that helps another trader. And if you're serious about mastering your own trading psychology, subscribe for more content on the mental game. Finally, share this video with another trader who needs to hear this. The market will be here tomorrow and the day after that. It's an indifferent ocean of probabilities, and it's not going to change for you. The charts will look the same. The only real question is, who will you be when you show up to trade? Will you bring your fear, ego, and impatience and see an enemy in the mirror? Or will you bring discipline, humility, and self-awareness, and finally, for the first time, see yourself?